Hello and welcome to the first video from BharatBulls, where we show you how you need to think in the market to be in the top 1% of traders. The aim of this channel is not to get you rich tomorrow, but to steer you in the right direction so you become independent in your trading career. For the first video of the channel, I thought I would do something very interesting. I would do a historical analysis of the weekly time frame of Nifty, and there is something that caught my eye that I thought I would share with you that will prepare you for the weeks that are coming ahead of you. So if you notice, in the last 3 weeks, Nifty has actually printed 3 red candles back to back. Now, I wanted to do an exercise with you in this first video where I go back and see how many times has Nifty done that. So let me just take out a flag marker that will flag wherever we see this pattern again and again. Okay, so this is the first and the most recent example. If we go back, this was the last occurrence that happened after we were coming out of the bear run in 2022, and the occurrence prior to that happened at the start of that bear market. um, then I see 3 more red candles over here printed back to back. Going back here, this would just classify as 2 red candles, so that is not a concern. I see 3 more red candles over here, 1, 2, and 3. I see anyone, two. I see anyone. Okay, do let me know in the comments if I missed any other 3 red candles that were printed. But okay, I can classify this as 3 red candles as well. Lower closing at each of these. If we go back a little more further, I see some 3 red candles over here, and this is just happening after the bearish run of the COVID had ended. So I will take the first 3 candles over here as well, and the next 3 as well, just for analysis. And we have another 4, 5 red candles printed back to back over here, another 4 candles printed over here, and some more candles over here. So I believe this is about as many times Nifty has printed 3 or more red candles back to back. So if you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 11 odd times in the last 5 years that Nifty has printed 3 or more red candles on the weekly time frame here. Now, the next thing I wanted to do was see the magnitude of this fall. So I believe let's start with the earliest example first. Here I have the price and range tracker. So let's say this was the fall. This was a 5.5% fall the first time it happened. The next fall also, if we take these 3 candles into consideration, would be about 4.5%. These 3 candles, the first 3 times this happened, was 5.5%. Actually, if we extrapolate this to the next few candles, we had 12.5%. This was a massive fall again in 2018, choppy kind of market. What I need you to remember was 2018 was a pre-election year. We are also in the pre-election year this year. Another 4, 5 candles on the downside printed back to back. The COVID fall I would excuse because this was panic selling, but this one I would like to take a note of. So we have another 4.5% of fall that played out over here. About 3.5% fall over here. We see another 4.5% fall over here. 4.5% fall over here. So I hope you can see the pattern that is emerging over here. Again, 4.5% fall over here. Majority number of times, the range of the fall is about 4.5 to 6.5%. But interestingly, this time the fall has only been about 1.5%. Now this signals two things to me. The first is that maybe the correction in the market is not over. There is potential for more downside. Remember that we are in the pre-election year. So I would just like to make a note of that for you so that even you can take a note in your trading journal and write these things down. We are in the pre-election year. So markets have always been choppy in the pre-election years. If you go back to the markets in 2018, like we just saw, there was a 12.5% fall over there. If you go back to 2013, I'm sure you will find a lot of volatility being played out. Back in 2008, again, a same kind of structure being played out because of the global financial crisis. So you have to be careful with your position size. The next thing that I want to worry is about the fall. The fall has been small this time, which tells me that there is potential to have more correction in the next few weeks. So these two things you need to keep in mind, that we have seen only a 1.5% of correction, and there is potential for more of this correction to be continued. If we go by historical analysis and if this correction extends to about 4.5%, now this is where it gets really interesting. Let's say it gets to roughly 4.5 or 5%. Look at where we are right now. We will be exactly at the top or the swing high level of November 2022. And who is to say that this cannot play out in the market? Everything is possible. We would continue to be in the bullish region or in a bull market as until the point this pivot level is not violated. Another pivot level that I'd be very intrigued to watch out for would be this one. This beautiful bullish pattern over here that started the beautiful rally after the markets turned higher on the higher time frame. This is what I would be carefully watching. This is the region where I would be looking to go long, and you will not find news over here that will be comfortable to you, and you will not be able to gather that courage if you don't have this analysis at your hand. So now you have seen that the markets usually retrace about 4.5 to 6% whenever Nifty prints three red candles back to back. With this, I hope you can make better decisions when the market actually comes to that level, or in case there is some period of consolidation, you are prepared to handle that volatility. If it goes down, you're ready to fight back up and be the bull in the market again. So thank you so much for watching, guys. Keep riding with the bulls. Hope you have a great weekend ahead.